Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The shutdown has dampened the dollar's mood, stock indices are unstoppable, gold at $4,000 per ounce is no surprise, and Bitcoin has received double support. The shutdown came as a bolt from the blue for the US dollar. The greenback was confident that Democrats and Republicans would reach an agreement at the 11th hour. That did not happen. During previous government shutdowns, the dollar index typically fell on expectations of slowing GDP and mass layoffs. In 2025, the situation is exacerbated by the fact that the labor market is already cooling down. Due to the shutdown, the publication of important data will be postponed. Therefore, the importance of the ADP report increases. Over the last 2 months, there has been a decline in private sector employment. This increased the chances of a federal funds rate cut in October to 99% and in December to 87%. Treasury bond yields and the US dollar fell. There is increased demand for safe haven assets in the markets. Gold continues to break records. Treasury yields are falling, and the yen has moved away from the political crisis in Japan and is growing steadily. In contrast, European currencies are not yet able to take full advantage of the weakness of the US dollar. The euro is hampered by geopolitics and events in France. The S&P 500 shrugged off the shutdown and marked its 29th record high since the beginning of the year. Pharmaceutical and technology companies, which received a tariff deferral, led the rally. The market was pleased by the news that OpenAI had become the largest startup in history, with a valuation of over $500 billion. Jerome Powell's comments about the high valuation of U.S. stocks led only to a temporary pullback in the S&P 500. Investors immediately bought up the dip. History shows that since 1996, similar rhetoric from the Fed chairman has led to an average 13% increase in the broad stock index over the next 12 months. There is a view in the market that high price-to-earnings ratios are the new reality. Corporate reporting is improving. The U.S. economy has shifted its focus from manufacturing to technology, and artificial intelligence makes the U.S. stock market unique and attractive. The ADP report on private sector employment did not deter the S&P 500. It finally convinced investors that the Fed would cut the federal funds rate twice more in 2025. The shutdown has become a new driver of the gold rally. Previous U.S. government shutdowns have resulted in mass layoffs and a slowdown in GDP. The U.S. economy is heading towards stagflation, and the lack of compromise between Democrats and Republicans is exacerbating the situation. The fall in the dollar index and treasury bond yields, as well as the growth in demand for safe haven assets, are creating a tailwind for the precious metal. Its main advantages in geopolitics and Fed easing have not disappeared. Donald Trump's words that Ukraine could regain all the territories seized by Russia and the acceleration of the personal consumption expenditure prices in the U.S. became catalysts for the gold's rally. In September, gold-focused ETFs saw their largest monthly inflow in 3 years. Thanks to rising prices, the reserves of specialized exchange-traded funds reached record levels in dollar terms. Growing investment demand, along with active bullion purchases by central banks, is fueling the precious metals rally. Major banks, including Deutsche Bank and Goldman Sachs, are forecasting its growth to $4,000 and even $5,000 per ounce. The shutdown, strong corporate buying, and high global risk appetite have pushed Bitcoin prices to their highest level since mid-August. Some investors perceive Bitcoin as digital gold, while others see it as a risky asset. In this regard, the U.S. government shutdown and the S&P 500's 29th record high provided double support. Corporations that increased their reserves by $44 billion reduced their trading activity. They purchased 12,600 coins in August and 15,500 in September, a fourfold decline compared to July's 64,000. The drop in demand prevented Bitcoin from growing at the same rate as U.S. stock indices. Shares of companies that actively bought crypto for their balance sheets fell, partly due to concerns about the need to pay an additional 15% corporate tax. After clarification from the Treasury, Michael Saylor's strategy announced that it was not subject to such taxation. Its shares rose, which helped Bitcoin. According to Citi, its price can reach $133,000 by the end of this year and $181,000 by the end of 2026. The shutdown postponed Jerome Powell's speech. The September U.S. job market report and the publication of the minutes of the Fed and ECB meetings will be the main events on the economic calendar for the week ending 10th October. Weak private sector employment data paint a bleak picture and push the Fed towards aggressive monetary policy easing. This is especially true given that the White House has no intention of easing pressure on the central bank. Donald Trump recently posted a cartoon story about the dismissal of the Fed chairman. In this environment, Jerome Powell's speech could provide investors with important clues, as will the minutes of the meetings of the world's leading central banks. Top ECB officials, including Philip Lane and Christine Lagarde, argue that the risks of inflation moving in either direction are limited. This allows investors to count on the end of the monetary expansion cycle. For the Fed, it has only just begun. In theory, this divergence should lead to the euro rising against the dollar. However, the final word will be given by the U.S. labor market report. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.